Welcome to the Deep Dive, the show where we, try to cut through all that noise and give you some real insights. We tackle complex topics and hopefully make them feel, well, understandable. Today, it's all about a tool that's absolutely essential for many traders navigating the day-to-day market moves, the volume-weighted average price, or VWAP. We're going to unpack what it is, how it's calculated, and maybe most importantly, why it's such a big deal for both the huge institutional players and for individual traders like you.
Exactly. Our goal here is really just to boil down, give you the key takeaways on VWAP. So by the end, you'll hopefully walk away feeling well informed, maybe with a couple of those aha moments about how the market, actually works under the hood.
All right, let's dive right in then. Let's get to the heart of what VWAP actually is. So starting right at the beginning, VWAP, volume weighted average price. You explained it shows the average price an asset traded at during the day, but that weighted by volume part, that's the key bit, isn't it? How does adding volume change things compared to, say, just a simple moving average?
Yeah, that volume-weighted part is absolutely crucial. It's what gives VWAP its real edge. Think about a simple average. It just looks at prices, right? Every price point gets treated the same. VWAP is different. It actually considers how much trading volume occurred at each price. So if a lot of shares traded at $50 and only a few at $51, the $50 price has a much bigger impact on the VWAP calculation.
Okay, so it reflects where the real action was.
Exactly. It gives you what you could call the true average price paid by all traders throughout the day, considering where the liquidity and conviction actually were. It's not just an average price. It's an average price weighted by participation. And the formula, without getting too bogged down in math, is basically summing up price multiplied by volume for every transaction, and then dividing that total by the sum of all the volume for the day.
Right.
It's cumulative, it builds throughout the day. And often that price isn't just the closing price of a bar, but the typical price, which is the high, low, and close added together, divided by 3, just gives a slightly smoother average for each period.
Okay, and you mentioned it's cumulative, but it resets every single trading day. That makes it fundamentally an intraday tool, yeah? So we're talking 1 minute, 5 minute, maybe hourly charts.
Exactly. That daily reset is key. You wouldn't typically use daily VWAP for swing trading over weeks. It's designed for the ebb and flow within a single session.
So why is it such a big deal then, especially you mentioned for institutions?
Right. That's probably the primary reason VWAP is so powerful. Institutions think mutual funds, pension funds, big hedge funds, they use VWAP extensively.
How so?
Well, imagine they need to buy or sell a huge amount of stock, millions of shares maybe. They can't just dump that order on the market all at once.
Oh, that would move the price against them immediately.
Precisely. So they break these large orders down into smaller chunks and execute them throughout the day. And their goal, often driven by algorithms, is to try and buy below the day's VWAP, essentially getting a discount compared to the average participant, or sell above VWAP, getting a premium.
Ah, so VWAP acts as their benchmark for good execution.
It's exactly that, a benchmark for efficiency. They measure their trading performance against it. Did they beat the VWAP? It helps them minimize their market impact and demonstrate they traded effectively. It's like their yardstick for the day's trading.
Wow, okay. That institutional angle really highlights its importance.
Mhm.
But for someone like me, an individual trader, how can I leverage a tool that the big guys are using? Is it about trying to trade with them? Or does it offer other benefits?
That's a great question. You absolutely can benefit. For retail traders, VWAP is super useful for a few key things.
Yeah.
First, spotting the intraday trend direction. Is price staying consistently above VWAP? That suggests bullishness for the day. Below, bearishness.
Okay, a quick visual cue.
Yeah. Second, identifying potential buy low or sell high opportunities relative to that day's average. If price dips significantly below VWAP and shows signs of bouncing, that might be an opportunity, thinking it's potentially oversold relative to the day's average transaction price.
And you mentioned support and resistance.
Yes, crucially, it acts as a dynamic support and resistance level. Unlike fixed price levels, VWAP moves with the price and volume throughout the day, reflecting the market's current consensus of value.
Right, dynamic. Okay, this is getting really interesting. So how do you actually read this thing on a chart? What do the different price interactions with the VWAP line tell us?
The core interpretation is pretty straightforward. VWAP is like that reference point for fair value for the session.
Okay.
So if the price is trading above the VWAP line, it generally signals bullish sentiment. Buyers are more aggressive, pushing the price higher than the average transaction price. Some might see this as overbought short-term, or it could act as resistance if price tries to pull back to it.
Makes sense. And below?
Price consistently below VWAP suggests bearish sentiment. Sellers are in control, pushing the price below the average. This might be seen as potentially oversold, or VWAP could act as resistance on any rally's attempt.
And what about when price is right on the VWAP line?
When price is touching or hovering very close to VWAP, that's often considered the market being at fair value for the day. It's a neutral zone, maybe an equilibrium point. It can also be a decision point. Will buyers or sellers take control from here?
I like that analogy you used earlier, a dynamic equilibrium line. It really feels like the market's center of gravity for the day's trading, balancing supply and demand based on volume.
That's a great way to think about it, yeah. It's constantly recalculating that center based on the ongoing action.
So what about those times when the price gets really far away from VWAP? Does that signify anything? You mentioned VWAP deviations.
Exactly. Just like Bollinger Bands use standard deviations around a moving average, some platforms offer standard deviation bands around VWAP.
Okay.
These bands help visualize when price is becoming statistically overextended relative to that volume-weighted average. Price hitting an upper deviation band, say 2 standard deviations above VWAP, might suggest the move is stretched, potentially ripe for a pullback or a fade trade back towards VWAP.
And the same if it drops way below.
Precisely. Price hitting a lower deviation band might signal an oversold condition within the day, possibly setting up for a bounce back towards the VWAP. It's about mean reversion thinking. Price tends to eventually gravitate back towards its average.
Gotcha. Okay, let's get practical. How do traders actually use this in strategies? Can you walk us through some common VWAP-based trading setups?
Absolutely. Let's talk strategies. One common one is the VWAP pullback, which is essentially a mean reversion strategy.
Okay.
Here, you're watching for price, maybe in an overall uptrend, to dip down to the VWAP line. If it finds support there and shows a bullish reversal signal, like a hammer candle or a bullish engulfing pattern, you might enter a long trade.
Expecting it to bounce off that fair value level.
Exactly. You're betting that the dip was temporary and price will revert back up, maybe towards recent highs or even further. Your target could be VWAP itself if buying below it, or higher level if bouncing off it. The stop loss would typically go just below the recent swing low or below VWAP.
Okay. Works best in ranging or gently trending markets, maybe.
Generally, yes. You need to be a bit careful in really strong parabolic trends where price might just keep running away from VWAP.
Right. What's another one?
The VWAP breakout. This is more of a momentum strategy. You're looking for a clean, decisive break above or below the VWAP line.
With volume, presumably.
Critically important, yes,
Yeah.
with strong confirming volume. A breakout without volume is often suspect. You'd wait for a candle to close clearly beyond VWAP, then enter in the direction of the break.
Okay.
Your target might be the next key support or resistance level, or maybe a measured move based on the prior range. For example, if BTC USD breaks firmly above VWAP at, say, $108,000 with a big volume spike, you might target $109,000.
The confirmation is key there.
Absolutely. Volume and a clean candle close. Then there's the VWAP bounce, or trend confirmation. This is popular with scalpers on like 1-minute or 5-minute charts.
Okay.
If the price is already in a clear trend, say uptrending above VWAP, and it pulls back to the VWAP line, holds it as support, and then continues higher, that bounce off VWAP confirms the trend is likely continuing.
So you're entering with the established intraday trend after a pullback to the average price.
Exactly. It's using VWAP as that dynamic support in an uptrend, or dynamic resistance in a downtrend. On, say, a BTC USD 1-minute chart, if VWAP is at $107,800, price is above it, dips to touch it, and then prints a strong green candle that supports a continued bullish move.
Got it. And a simpler approach.
A very simple application is just using VWAP as a basic trend filter. Super straightforward. Price above VWAP. Only look for long setups. Price below VWAP. Only look for short setups.
Just keeps you on the right side of the intraday flow.
Pretty much. And crucially, this approach helps you avoid trading when price is just chopping sideways around VWAP, especially during the middle of the trading day. That area can be a real account killer, just rip-sawing back and forth.
Yeah, that midday chop around VWAP. I could see how that would be tricky. So sticking with the dominant side relative to VWAP helps avoid that noise.
It definitely can. It provides a clear bias for the session.
Okay, so we've talked about the standard VWAP that resets daily, but you mentioned another version, anchored VWAP. How's that different?
Right. Anchored VWAP, or AVWAP, is a really powerful variation. The key difference is it doesn't automatically reset every day.
Okay, so when does it start?
You choose the starting point. The trader anchors the VWAP calculation to a specific point in time on the chart.
Like what kind of point?
It could be anything significant. The start of a new uptrend, a major news release, an earnings announcement, a significant high or low, a gap up. Any point you think marks a potential shift in market psychology or participation.
Ah, I see. So instead of the average price today, it's the average price since that specific event.
Exactly. It calculates the volume-weighted average price from that anchor point forward. This makes a VWAP much more useful for swing trading or longer-term analysis than the standard daily VWAP. It helps you understand the average price paid by everyone who got involved since that key moment.
That sounds incredibly useful for context. Is it easy to find on platforms?
Yeah, it's become pretty standard. TradingView has it built in. You literally just right-click where you want to anchor it and select Anchored VWAP. TrendSpider, too. Thinkorswim might require a custom script for the true anchored version, though you can approximate it.
Good to know. And just circling back quickly, you emphasize VWAP itself acting as dynamic support or resistance.
Absolutely. Price often respects it. You'll see pauses or reversals right at the VWAP line quite frequently.
And those deviation bands you mentioned earlier, they help quantify how far price is from that VWAP support or resistance.
Exactly. Think of them like probability bands. Price reaching, say, the second standard deviation band above VWAP means it's moved significantly further than the average participant's price for the day. That increases the odds, statistically, of a reversion back towards the mean, back towards VWAP. Doesn't guarantee it, but it highlights an extended state.
So potentially a fade opportunity if it hits the upper band, or a bounce opportunity if it hits the lower band.
That's the idea behind using them for mean reversion setups, yes. Recognizing when the market might be temporarily overstretched relative to its volume-weighted average.
And platforms often have these bands built in too.
Many do, yes, often called VWAP bands or VWAP with standard deviation bands. Makes it very easy to visualize those potential overbought or oversold zones relative to VWAP.
Okay, this is great stuff. Any sort of pro tips for people wanting to integrate VWAP more effectively? Things to really keep in mind.
Definitely. A few key things. First, and I can't stress this enough, combine VWAP with volume analysis. A break of VWAP without a confirming surge in volume. Be skeptical. Volume validates the move.
Got it. Volume is confirmation.
Second, always consider the higher time frame bias. What's the daily or weekly trend doing? Don't try to fight a strong higher time frame trend based solely on an intraday VWAP signal. Use VWAP in alignment with the bigger picture.
Makes sense. Context is king.
Third, avoid the midday chop around VWAP. Seriously. That period when price just consolidates right on the VWAP line is often a trap. Wait for price to clearly establish itself above or below VWAP before engaging, especially if you're looking for breakouts or trend trades.
Patience pays off there.
It really does. And finally, wait for confirmation. Don't just jump in the second price touches VWAP, wait for the current candle to close, or for a clear reversal pattern to form, react to what the market does at VWAP, don't anticipate.
Don't guess, react. Love it. Okay, so how do people actually add this to their charts? You mentioned TradingView and Thinkorswim briefly.
Yeah, it's usually very simple. On TradingView, you literally go to Indicators, type VWAP or Anchored VWAP, and click it. For a VWAP, you then click on the chart where you want it to start.
Easy enough.
On Thinkorswim, the standard daily VWAP is under Studies. Just search for VWAP. Anchored VWAP, as mentioned, might need a custom script, though there are workarounds. Most platforms make the standard VWAP very accessible.
And reminding us of the best time frames.
Primarily intraday, so 1 minute, 5 minute, 15 minute, maybe up to the 1 hour chart for day trading decisions.
And you wouldn't use it in isolation, right? What does it pair well with?
Definitely not in isolation. It pairs really well with volume, obviously. Also useful alongside moving averages to confirm the broader trend direction. And combining it with momentum oscillators like RSI or MACD can help identify divergence or confirm oversold readings near VWAP or its deviation bands. You're looking for confluence multiple signals pointing the same way.
Okay, let's try to bring this home with that BTC USD example you mentioned. Paint the picture for us.
Right. So imagine it's, say, July 5th, 2025. Bitcoin, BTC USD, is trading around $108,077. You look at your chart, and the VWAP line for that day is currently at $107,800.
Okay, so price is above VWAP.
Exactly. That immediately tells you the intraday sentiment is leaning bullish. Buyers are, on average, paying more than the day's volume-weighted average. Now, let's say price pulls back to that $107,800 VWAP level. If it holds there, maybe forms a bullish hammer candle or engulfing pattern right off the VWAP line, that could be your entry signal for a